Investment is always tricky. Everyone wants to watch their money grow with high returns, but with the least amount of risk. Yet a lot of us still stick to the traditional concept of saving. Though saving money is good, but putting that money to work is better. The concept of saving is smart, but investments in assets is smarter. Holding or saving cash in the long run can prove to be a liability, since the saving accounts and the low interest rates are not adjusted for inflation. Thus, your money's value only depreciates over time, and so does its power of purchasing. Here is a list of 5 assets that are better than holding onto cash. 1. Gold. Holding gold as an asset has been considered a safe haven and a hedge against inflation for the past 50 years, so it's often seen as better than holding cash. Here are some reasons. Inflation hedge. Gold is widely regarded as a hedge against inflation. When the real returns on currencies and other assets are negative, gold retains its value because it is a physical asset that can't be created at will like a fiat currency. As the cost of living increases, gold also tends to increase, so gold owners are protected from the eroding effects of inflation. Currency hedge. Gold can also act as a hedge against currency risk. If the value of a particular currency drops significantly, it can lead to a higher gold price in that currency. This is particularly useful for people living in countries with unstable or hyperinflationary economies. Portfolio diversification. Gold often performs differently than other financial assets, such as stocks and bonds. This makes it a good tool for diversification if you already own stocks. Universal acceptance. Gold is universally accepted for its value and has been for thousands of years. This means that even if a fiat currency's value decreases, gold's value will still be recognized globally in financial markets. While gold has these advantages, it doesn't come without risks. The price of gold can be volatile in the short term. It doesn't provide income like dividends or interest, and costs can be associated with its storage and insurance. There are also gold exchange-traded funds that can be bought. As with any investment, it's essential to consider these factors carefully. 2. S&P 500 Index. Holding an investment in the S&P 500 index is often seen as better than holding cash due to the potential for higher returns and the power of compounding. Here's why. Historically higher returns. Over the long term, the S&P 500 index, representing a broad diversification of the U.S. stock market, has provided significantly higher returns than the interest earned from holding cash in a traditional savings account. From its inception, the S&P 500 has had an average annual return of approximately 10% before inflation, including capital gains and dividends. Passive investment strategy. Investing in an S&P 500 index fund is a type of passive investing, meaning it requires little time or knowledge about individual companies. This makes it a more straightforward investment strategy for individuals who do not have the time or inclination to manage their investments actively. Diversification. By holding the S&P 500, you're investing in 500 of the largest companies in the U.S. across a wide array of industries. This diversification reduces the risk associated with individual companies or sectors performing poorly. Dividends. Many companies included in the S&P 500 index pay dividends, which can provide an income stream to investors and can be reinvested to grow the investment further. Like all investments, investing in the S&P 500 index isn't without risk. The value of the index can go down, and investors can lose money, especially in the short term. It's also worth noting that while the index has historically returned about 10% annually, this is an average. It can be down -5% one year and then up +15% the next. Past performance does not guarantee future results. It's essential to consider your personal risk tolerance and investment goals before investing. 3. Real estate. Owning real estate has several advantages over holding cash in a bank account, which makes it a preferred investment for many people. Here's why. Appreciation. Over the long term, real estate tends to increase in value. While market fluctuations can cause real estate prices to drop in the short term, historically real estate overall in the U.S. has appreciated over the long term, leading to significant capital gains. Rental income. If you rent out your real estate, you can generate a steady stream of income that is often higher than the interest you'd earn on cash in a bank. This rental income can help offset the property's costs and serve as a steady income stream, especially during retirement. Leverage. Real estate allows for leverage, which is the use of borrowed money to increase the potential return of an investment. A mortgage allows you to buy a much larger asset than you could afford by only providing a percentage of the total cost up front. If the property appreciates, the return is based on the total value of the property, not just the initial investment. Like any investment, real estate also comes with risks and downsides. It requires ongoing maintenance and repairs. It's not as easily converted into cash as other investments. 4. Land. Like real estate, owning land can offer advantages over keeping cash in a bank. Here are some reasons why. Appreciation. Land often appreciates over time. While this isn't always guaranteed, land can significantly increase in value over time in many areas, especially those experiencing growth or development. Unlike properties, land doesn't depreciate due to wear and tear or age, and its appreciation is usually tied to factors such as location, zoning, and the overall demand for land in the area. Potential income generation. Depending on its location and characteristics, land can be used to generate income. This could include leasing the land for farming, timber production, mineral extraction, oil drilling, and natural gas wells, or developing it for rental properties. Lower maintenance and costs. Unlike buildings or homes, vacant land typically requires less maintenance and has fewer associated costs. There are no utility bills, mortgage insurance, or maintenance and repairs. Flexibility and control. Landowners have a lot of flexibility and control over their investments. You can decide to develop the land, sell it, lease it, or even hold onto it while it appreciates. However, owning land also has its own set of challenges. It can be illiquid, meaning it can take time to sell, and it doesn't provide an immediate income unless you lease or develop it. 5. Treasury inflation-protected securities. Treasury inflation-protected securities can be a better investment than holding cash in a bank for several reasons. Regular interest payments. TIPS pays interest at a fixed rate twice a year. The rate is applied to the adjusted principal, so like the principal, interest payments rise with inflation. This provides a steady albeit modest income stream. Risk reduction. TIPS are issued by the U.S. Treasury, making them a very low-risk investment since they're backed by the U.S. government's ability to tax its citizens. This level of security is appealing to many investors, particularly those with lower risk tolerance. Higher potential yield than savings account. While the yield from TIPS is typically lower than that of other investments like stocks or corporate bonds, it can be higher than the interest rate provided by a typical savings account, especially in an environment of rising inflation. Accessible and tradable. TIPS can be bought and sold in the secondary market, providing some liquidity level. Although the TIPS market isn't as liquid as regular Treasury bonds, they can be purchased directly from the U.S. Treasury at auction in increments as low as $100, making them accessible to individual investors. There are also TIPS exchange-traded funds. However, it's worth noting that TIPS do have some downsides. They typically don't offer as high a return as riskier assets like stocks. They are also most effective in a portfolio when inflation is high or expected to rise. Traditional savings methods, such as holding cash in a bank, often lag behind more diverse and forward-thinking investment strategies in our current dynamic financial landscape. It's important to explore different avenues for wealth preservation and growth. While these assets offer unique advantages over holding cash, they also possess inherent risks and complexities.